S&P forms a doji, but the real breakout was the bond market. Yields are well over 4% now. We're getting to that 4.10 on the 10-year. We're going to talk about why that's happening. Why Bostic is now saying he's open to skipping rate cuts, and how China is affecting all of this. We have a lot to go over for a Thursday. Let's get right into it. Start with China, just because we're on the page. So we're all aware of the Golden Week, and I do think that this is a really easy way to do this. If you go to the 24th, where they first started what was happening, and this reinflation trade, how they are trying to lift their economy up the same way we did 4 years ago, and you just drop an anchored VWAP from there, you can see very clearly that no one that bought that trade on average is up. Now, if you do this over and over again, go to the 26th, and you keep doing this over again, you're going to notice something. Yep, I get it. It's going up. But here's October 1st. So anyone that bought after October 1st and bought in China is up here. They are way out of position now. Way out of position. And this is where you're at. So they're underwater. Now, what's so fascinating to me about that is if you're in this position where you're completely underwater and now you've stopped, well, you're getting new buyers that are in here. And I'd rather use this ETF. Now, there's a couple different ways to use this, but this would be more the H shares, where you look at something like this, which would be the A shares, which is directly linked to mainland China. And then you can use FXI, which is linked to more the H shares, large cap companies. Drop that, and you can see that 24th level is of major significance. See how we just sit there over and over and over again? Really important to get that concept. Why? I want to know where all the players are, because you have institutions that are buying this. You're going to see on Saturday. Make sure you watch Saturday's video, because we're really going to dive into this and what smart money, dumb money's doing. It's pretty fascinating, actually, what smart money and dumb money are doing right now. See this gap right up here? And you have these lines, and I get it. Like, here's point of control, and here's the value high, value low. On daily, I don't really fall into it. I understand why you have the gap there, but if you get into this gap, you have a straight run up here. It's about 3% on an index. It's not really something to sneeze at. And you're going into Saturday, and we'll talk more about this on Saturday, but Ministry of Finance meets this week, and we could see some news. Now, what does this have to do with the U.S. and what's happening here? Well, U.S. is basically flat with a doji, and you had some news today that really could have moved us one way or another pretty violently, and quite frankly, it didn't, for a whole litany of reasons. So that we can go over this very briefly, but for those that are new, welcome. This chart I've been going over ad nauseum, and you're going to see it probably until December. In this section, which is really where we are, this is the zero line, and this is what happens when they cut rates. Now, right into that, what we're saying is we want to see all that data, and we want to see how that data comes out and what happens with that data. So as that data comes out, is it recessionary? Or is it increasing productivity? I've been stating for a very long period of time that it's my belief that we are going through something very similar to 84, 87, 95, and 98, where you can see that productivity will increase, which is exactly going to have you go forward and have a good economy, or a decent economy that the market can go higher. Where if you look out there, right, a lot of Freddy Fingers on Twitter are just out there saying, oh yeah, it's going to be like 01, 07, and every time they cut rates, we drop. It's just not the true, hence N5 versus N3. But if you take a look at this period of time is critical. And actually, if you're in Europe, it actually goes out further. It goes for 3 months. But for us, it seems to be 2 for whatever. So we get an understanding of what's going here. So far, this data that's coming out is good, because you have rates dropping and you have increased productivity, which is leading us into this camp. And that's what's really important about this. And that's why we're not seeing so much selling going on, because it's a different kind of fiscal and monetary policy right now. Here, take a look at this. If you're familiar with our pre-market live stream that we did, and we do it every morning at 8 o'clock, but usually it starts at 8:15. Just subscribe to the channel, click all notifications so you don't miss them. They are packed. Today's was packed, and you would have caught on to a lot of those cyber trades had you watched that. Some other big names. We were actually trading NVDA pre-market ahead of this, frankly. But if you look at that range, people say, wow, that was your whole day. Your whole day is in this 830 bar again. This 830 bar is your entire day. Why? This is when the news hits on CPI. And what happens from this place is very, very simple. What they do is the algorithms are showing you what their range is. The high frequency traders are showing you. And people say, well, it's just not simple. Actually, it really is that simple. If you go on economic days and you mark off the 830 bar, or you do this at 2 o'clock on the Fed meeting, and you start getting in the habit of doing this on non-farm payrolls, you will be surprised at how easy your life gets. Not maybe on trading, but certainly on drawing these levels and understanding what your range and that you are range bound. It's a very simple neat little trick, and it works. So if you see up here and then see down here, you know what your range is. Why? Because of this data. Nothing really changed on the day. What I like to do with this as well is you just come here and you drop a 50% line. 50% is not a fib, I understand, but it lets me know are the buyers or sellers in control. And if you were to look at this on the day, what would you suggest? And another thing you can always just do is on a percentage basis. Well, who was in control today? Well, we definitely spent more time as sellers than we did as buyers, right? You can do the same thing here if you take a look at the NQ, and you're going to wonder, like, why is this so important? Well, it's so important because if you look at the NQ, the first thing you're going to see is, I'm not really sure. Well, who trades in the first hour of the day? Retail. Okay, so retail is selling, okay? Retail's moves first hour of the day. Here's our range, broke the range, test, bonk, 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 Matumbo, and then finally breaks out. Tries to get over the high, complete Matumbo, tries again, Matumboed, right? So what does this do for us? Well, this tells us very clearly that in the first hour, we had a bunch of sellers, and those sellers are mostly retail. Then as the day went on, over the top, we had what? Buyers. Then as the end, in 2 o'clock, we had sellers, but we were really riding that 50% line, and you see you keep touching it over and over again, and then you finally flip it at 4 o'clock. What it's telling you is that you're getting through supply. So I would focus on the NASDAQ more than this right now. Now, what's happening is the reinflation trade on the China side, very similar to what they did to us in 2020. Maybe not the same way. Maybe it's going at 35 miles an hour, not 135 miles an hour, right? I don't think they're going to be over there thinking JPEGs are called NFTs or anything like that. But I do think it's something for us to watch. So now that we have this and we know that they're leaning more towards the NASDAQ, let's get into the data. This site is called Trading Economics, and I'm just going to show this right here so that you can see it for yourself. And I think this is a really simple way to do this. Just show you everything. So here's core inflation, 0.3 to 0.2. So this beat. This was estimated to beat, and we went over last night why it was probably going to beat. This is core, and this beat. Now remember, food and energy are taken out of core. For whatever reason, they don't think that that is a core metric. Okay. But then year over year, that beat. Every single metric beat. And if you go here, you're at 315.30 versus 314.86. So everything in absolute and relative terms beat, and the market's still up. We're going to talk about why that's the case. Now, down here, this initial jobless claims number is throwing people off. And I do think that this is an issue. Why is this such an issue? Why is this so important? Well, 230 right here versus 258. Why do we care about it? Because the market could have cared less. Why? Because they know that there's a hurricane, and they know that that's one of the reasons why the claims are up, and it's very clear for that reason. Therefore, this is something that we should be paying attention to an extent, but I think got blown off. What didn't get blown off here was they bought the short week right here. Very clearly, they bought the short week on the T-bills, and we should pay attention. See how this was the previous, and this is where you're at? And then you can see where the mortgages are and how mortgage rates are already starting to uptick. What's that telling us? That's telling us very clearly that no one thinks the amount of cuts that are out there. So they know that they can make more money off the home buyer, so they're already raising rates. Then you get into the 30-year bond auction. And the 30-year bond auction last month, we were at 401. Now we're at 438. So now you're getting 10% more yield on here. Now, to put that in perspective, if you know how T-bills work and bonds work, you take the yield difference between that month and the other month, and what you do is you figure it out. So you have 40 basis points times 40 basis points times 30 years. And that's going to tell you, because you take the duration, and that's going to tell you how much that bond moved in a month. That is an enormous move for a bond. Enormous on that auction, okay? And that's coming off a 50 basis point cut. And that's really important to get, okay? Really important for people to understand. So people are once again doing what? Losing money by doing what? What does this mean? It means that they're going to go to buy a risk asset. Okay, so if we're going to reinflate, let's get to it. If you're going to go out there and reinflate asset prices and commodity prices, and energy's not going to save you this time, that's very clear. They're going to start buying the NASDAQ again. They're going to start buying the big seven again. That's where this is probably heading. Now, the biggest issue that we have with the NQ in this level, we still cannot get over this level. And I think it's really important to just state what this level is again. Right here's where you had CPI that was month over month was negative for the first time. If you go look at that data, you had a negative reading on CPI. You have not had one of those since the pandemic. This is our new CPI reading. And of course, as always, these dates are always very significant, and there's usually a macro issue like them raising rates in Japan, et cetera, et cetera. We can go through that all again, but we're not going to. So this is a core issue for us. We're riding the line, we're not falling down on the data, and we're going sideways. And I think that's very important. Now, tomorrow you're going to have PPI, so we're going to get even more data. But this does get interesting as the day went on. At least to me it did, because I like looking at stuff like this and then watching what the reaction of the market is. Market responded favorably to it, and we actually went higher. And you would expect that not to continue because of the equity risk premium, but they blew it off. Another thing I really want to point out here, guys, and I think this is very, very important. Here's the Fed balance sheet. The Fed's been selling assets left and right. Look what's happening here. Fed's not selling anything from previous and actual. They're not selling anything. So you want to start watching this, guys, because if you start seeing this uptick, it means they're buying assets. But right now, they're not doing anything. And I think that's really very important. If you take a look here and you look at the PPI, core PPI year over year, this will come out tomorrow. If this is in line or lower and CPI is higher, remember, PPI is producer price index. This is what they buy to sell us a good. So the producers buy this, say they want to sell us a chimichanga at Chipotle. They would go here and buy all the ingredients, and then they would go from here, and then they would sell it to us. So the difference there is what's important. Once you understand that difference, it makes your life a lot easier. Now, watch PPI tomorrow, watch how we act, and then of course you're going to want to watch Michigan Consumer Sentiment and watch how that comes out as well. That will be very, very important. Of course, you're going to get 15 Fed speakers because they're allowed to speak again, so they'll tell you, this one will tell you it's good, this one's going to tell you it's bad. But you're going to want to watch, how does the consumer feel about the market right now? I think that's important, but PPI is going to be really important tomorrow. The bigger the spread between these two, the bigger the corporate profit. Understand you had probably a really bad 30-year bond auction, and it got completely, utterly blown off today. And that's something that you should really be paying attention to and not ignoring. Now, if we look at IGV, we can see here very clearly the breakout on this. I don't think people truly get this breakout, so we're going to show you it so you can actually see what's going on here. You have a multi-year cup and handle, and it really doesn't get much cleaner than this as a cup and handle. I mean, you know, here is your little teapot, and there's your spout, right? I mean, it gets pretty clear what's going on there, doesn't it? I don't think anyone's going to miss that as a cup and handle. Of course, I'll get a comment telling me it's not, and they're going to tell me it's a triple Indy or something, but that is a cup and handle. And you can see the break there. It's very clean. Go look at those names. Now, there is a driver of some of these that are pushing it today. We should talk about this driver because a lot of people don't even know that this happened. Now, American Water Cyberattack renews focus on protecting critical infrastructure. Number one, I didn't even know there was a cyber attack on American Water. And that's pretty weird considering that I watch Bloomberg in the morning, which is pretty reliable. I watch it for maybe 15, 20 minutes just to see if I need to see anything. It's really the only TV I actually watch, frankly, besides that in sports. After that, I go through my news. I didn't have a lot on this, guys. There really wasn't a lot out there. And this gets pretty interesting. A cyber attack continues to affect the largest regulated water and waste utility company, renewing a focus on the importance of protecting critical infrastructure sites. I thought there was an infrastructure bill. New Jersey-based American Water paused billing to customers and announced the cyber attack on Monday, so it was becoming aware of unauthorized activity. Boy, I get Thursday and immediately took protective steps, including shut down certain systems. Thankfully, water services are unaffected. Drinking water, 14 states. Isn't that crazy? 18 military installations. Does not believe, that's great, facilities operations were impacted by the attack. Staffers are working around the clock, but they paused the billing. I guess the billing is something they're worried about. But this stood out to me when I went through this. And I did a trade today and it didn't work. And people say, you should talk about your trades that don't work. So I'll show you one. The U.S. Cybersecurity Infrastructure and Environmental Protection Agency urged water systems to take immediate action this year to protect the nation's drinking water. This is what got me. 70% of utilities inspected by federal officials recently violated standards meant to protect or breach other intrusions. 70% of utilities inspected by federal officials recently violated standards meant to protect breaches or other intrusions, the EPA says. Do you think the EPA is going to crack down on these utilities now? The answer is yes. Okay, so there's two sides to this. Let's get into this. First, if you take a look at IGV, and if you're in the community, you already know this. If you're not in the community and you're interested, the wait list is back open, and I will get to sending out invitations shortly. But I created this whole list of IGV holdings, and you can go through this, or you can make your own list. You can screen it, whatever. But you can get your own holdings. But here's the watch list, and what's interesting about it to me is that if I go here and start daily, and you start seeing that out of nowhere, these things are just squeezing, right? And you're not seeing any love. But I think that comment's really important. Because to me, it means that these guys, see, there's devil's advocate here. So when you're looking at something like this, and when I say devil's advocate, let me explain what I mean by that. So when I'm looking at something like this, what I mean is, I would think that this would just fade. It's a bunch of people getting short squeezed, right? Just on a Thursday, some news, they're going to squeeze them. Where I might be wrong on this, and because you can see the volume spike, etc., is if the EPA starts going to these people and saying, hey, where are you with your cybersecurity budget? I mean, how many people cut their cybersecurity budget or moved off cybersecurity with some of these names, right? How many people moved off these names because they wanted to go buy the new shiny thing and they wanted to start buying AI? I don't have an answer to that, but that statement makes me think that. So I did a short here on crowd and it just didn't work. Now, I pointed this out already and I already have it set up, so I'm going to point it out again. You have a huge gap fill here. An enormous gap that you can fill right here, right to 342, right from here, and you can see your volume profile, and you can see the gap right in the shelf right there. This is a pretty good trading idea I'm pointing out right there. I was short this. Sometimes things don't work. It is what it is. On to the next one. I found that statement interesting, and then you go and look at these things. Like hack. Watch this on a weekly chart. Look at these breakouts. Now, does this continue or do you fade because of that? That I don't have an answer to yet, but I do like the way some of these names are setting up. They are setting up, and they do look like they're setting up to move higher. Personally, I still like the AI trade, but there might be some more to this, and that means that the IGV trade, either way, just might have another catalyst. So you have all these extended semis, right, that are out there that people are looking at. Now you're going to have software that they're going to chase. And I think that this is what they're going to chase. I think they're going to start going through those names I just went through and start saying, hey, well, this one's down, that one's down. And you can just go through the list of them and start seeing how they're starting to move. Hubs, Team, all these names are starting to break out. Even Snow actually got some love today, which is kind of crazy, but it did. So I think that's really important for us to understand that you are seeing drivers out there. If you take a look at what this could do, IGV usually leads and then the stocks will follow. And I think that's what you're seeing here. But the question again is, where are people going to put their money? Because you used to have this entire rate cut trade, and that rate cut trade went away. And you're not going to make it on yield because you're not going to buy yield because all of a sudden you don't have to worry about the bond prices, right? So the bond prices are not going to get away from you anymore if they're not going to cut rates. So you're going to start looking at tech and earnings. So think this through, and we'll talk more about this on Saturday, but you're going to go through what we're going to go through with CPI. Then we're going to get into earnings. And then after earnings, you're going to get through November. There's nothing left but earnings after you get through the election. Okay? And I think that's really important, but this is making it much clearer. Take a look. So in front of you is the CME Group website. And what this is November 7th, December 18th, January 29th, and you can see the dates right here. And what I want you to do is I just want you to look right here at where it says 475, 500 and what we're supposed to be looking for rate cuts. And then we're going to look here at 475, 500. We're going to realize that there's a 13% chance that they leave rates alone. Well, last Friday, this was 0.8%. At one point today, this was over 20%. Now, what I think happened was I think people went through that data and they think the data is skewed because of the hurricane. Yes or no? It's very possible. But you want to understand this data and how CPI is calculated. I went through it last night and explained why eggs are better than gold. You can go and watch that video if you like. But if you see this right here and you're seeing how that's going, 13.6%. Well, last week by October 2nd on this date, you had a 0% chance of that, okay? And a month ago, you had a 27% chance of it. So they are seesawing you around. It's not supposed to be like this, guys. The amount of volatility that this Fed has created over rates is something that I've never seen before in 25 years of doing this. It's kind of crazy. It doesn't usually work this way. It's not usually just, where it's just all over the place, where it looks bipolar. So if you look here, 13.6, there is now an 80% chance of 450 to 475, and then it goes to 86. So there is now an 86% chance that they are going to cut rates in November. So with that data that came out, this is where it gets super interesting. With that data that came out that was hot, right? They actually increased their probability of a rate cut. That's kind of interesting, right? If you get that. So you might want to watch that. Just make sure you get it. Now take a look over here. This takes you out to December, and that's where we'll stop. There is a 0.2% chance that they leave rates alone. I always find this so fascinating because even though there's an increased chance of a rate cut in November, there was never any chance that they were ever going to leave the rates currently alone here. But now they're floating it out there that, hey, not only might they not cut in November, right? Not only might they not cut in November, but there's also a chance now. And people say, well, it's only 0.2. Last week, this was 0.8 in November. Now it's 13%. So what if there's that? And just add this together and say, okay, well, there's a 14% chance that they do 25 basis points in 2 weeks. That's 1 weekend of them doing nothing now. But if you compare these numbers, the chances of only 1 drop and the chances of 2, I thought that was kind of interesting. And what I think it means to me is that we're getting that sweet spot where you're going to get productivity from a group of stocks very specific names, such as this entire AI trade, but that doesn't mean that the whole market is going to get it, right? In other words, do the other 490 names out there still drag? And do they need to spur the economy despite this? And the answer is, yeah, this is how 95 started. There were a couple key names. You know, and everyone starts the same way with ChatGPT. With us, it was Netscape. And everyone looked at Netscape and said, I don't know what to do with this thing. And then fast forward a decade later, and you can't live without being on the internet. So I think that that's really very important to get here. And I do think that you're going through that process as well. All I'm focused on with this particular video for you is to kind of open your mind that we are going towards that increased productivity instead of that recessionary time. They're still talking about cutting rates. And at the same time, I think it's really important to understand that NVIDIA had this massive conference that everyone bought into, and the stock's still going higher. There's no sell the news event. AMD comes out, has that little event today, and the first words out of her mouth is, we're going to talk a lot about AI today. And as soon as she said that, the stock dropped 7 points. So, I mean, just look at this drop. I don't think I use a 5 or a 1. But if I'm to look at this, as soon as she spoke, that was it. It was game on. Okay, this is really important to get, guys. There's nothing there, right? So you're going to have very specific names that are going to benefit from this. And I have what I think my names are, and we can always get into that in another video. But you want to look at these and you want to find ways into them. And you might want to watch one of these 2 videos that I did on swing trading, because I think they do give you a pretty good idea of how you can look to find these opportunities during the day. That's it.